is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We got taken by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. And it's not a TGIF, folks. It's a TGI decade, which is pretty wild, man. So, the 4 agreements, that's the cards that I read every day, folks. And I was just looking at this deck right here. This deck, I think I've probably had for 20 years. Still in pretty good shape, too. So, and I suspect at the beginning of the decade, I read this card, because this is a great card just for all around. Check it out. Always do your best. Take action on your ideas. Doing your best means to take action on your ideas. You can have many great ideas in your head, but without action upon that idea, there'll be no manifestation, no results, and no reward. Market-wise, let's take a look at it out here. We have the Dow Industrials down 32, NASDAQ up 11, S&P's down 2, gold contract up $4.30, trading at $15.22 an ounce. Silver down 6 cents, $17.93 an ounce. Light sweet crude off 61 cents, $61.08 a barrel. Notes and bonds. You get the 10-year down 8 ticks, trading 128.09. The 30-year off 21.6, 151.19. And King Dollar. King Dollar down 253 ticks, trading 96.488. Euro is at 112. Yen is at 108.64, and the pound is at 132 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so you have 2 weeks of holiday trading. That was with Christmas as well as New Year's being in the middle of the week. Bottom line, yesterday you basically come off the highs. SPY came down with the 49 million shares. You're at 23 right now. That'll probably do about 30. You hit $320.15. You get light volume. You're coming into option expiration, which was December 20th. Bottom line, that's saying to me that even Thursday, Friday will kick into high gear on January 6th. More than likely, this thing was going to try to hit the highs one more time, and then, we'll see how this baby shakes out. NDX 100 is set up the same way. We take a look at the NDX. You'll see the NDX is set up the same way. Bottom line, NDX has rejected lower price out here today at $211. You get down to 211 yesterday. Yesterday you had 21 million shares. You're at 12.3 right now. So bottom line is that I expected, you'll go up and touch this high once again. And bottom line, we'll see whether it can hold price. Gold contract. What do we have with the gold contract? Gold contract out here. Gold contract out here is up $4.50. You have done 207,000 contracts. Now, that's big contract volume, particularly on a holiday trading week, folks. Okay, we're at the top of the range. The top of the range inside the gold right here is that 1525 to 1527. Bottom line, you're pushing that top of the range with volume. That's telling me that gold wants to get up to the 1571 area, which is the highs of September 4th. We go take a look at King Dollar, and it's all about King Dollar. So King Dollar, folks, has broken its uptrend that it's been in since February of 2018. You get a break. The break's with conviction. It's a decent break. What that is setting up number one, that you go after the 95 area, and number two, the real kicker is that what is going to be wide open after that 95 area is the lows of 2018, which is 88.253. And what that's all about is that the euro finally stopped moving out here. So the euro has been in a downtrend also since February of 2018. That is on the verge of kicking the downtrend. Hasn't quite done it yet, because that, well, it's done it, but I want to see it do it with conviction. With conviction means, you know, we don't have volumes on these. So conviction, most times conviction is that you got wide price spread, you get accelerated volume. In this particular case, I want to see that wide price spread. You know, and in both cases, you can make the case that the first break was the week of December 13th. You know, but I want to see a nice wide bar there. You get a nice wide bar there. That's saying that the euro wants to go back to 125. We're at 112. The euro bottomed out at 109. The pound, the British pound, that had already changed course, and that is showing strength right now. And of course, that's all it's really going to take, is that the pound as well as the euro going higher to basically push the dollar lower. Pound up here, we're at 132.29, and with game out here, you know, you got 143 is game as well as 150. So you're going to get some, I suspect we're going to get some quite a bit of action inside the currency markets. And in fact, if you're up in Canada or you're in Australia, we got plenty of listeners in Canada. The Canadian dollar, you know, as our dollar just backed down slightly, the Canadian dollar really got stronger. We just went from 133 to 129. This bar out here today is a monster. So the Canadian dollar is getting some strength under it, and you almost broke the consolidation. The Canadian dollar saying it wants to get down to 120. And that's going to save the Canadians a huge amount of money, no doubt, when they are basically vacationing in Florida, which they love to do, and we'd love to have them here. Because we're not only, you know, it's wild too, folks, okay? So Tampa, you know, they've only got the Lightning, you know, not that long ago. I don't know, 10, 15, maybe 15 years ago, I'm not sure. But the bottom line is that, of course, you know, a lot of Canadians are huge hockey fans too, and bottom line is that Tampa St. Pete has turned into a huge hockey town. Now, let's go take a look at, so Netflix is, you know, if we take a look at Netflix in the course of 10 years, folks, bottom line is that this is pretty intense. You know, you get, why not go back and look at 10 years? So you get a stock from $6.93 10 years ago to $322. And of course, without, we got to get into Bitcoin. Bitcoin is tremendously down from its highs, but guess what? If I bring this back 10 years, this is like hard to comprehend number-wise, because Bitcoin 10 years ago, folks, was 21 cents. Yes, that's 21 cents to 21 pennies, up to 7,447. So just matters when you got into Bitcoin. No doubt about that. Dow Industrials down 21, NASDAQ up 13, S&P's flat. You stay right there, folks. We're going to come back with our man, Mr. Basil Chapman. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 21, Nasdaq's up 13, S&P's up flat. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the hour. Now, don't forget, folks, Basil does an outstanding show here every trading day from 12 to 1 Eastern Standard Time. Also has a great newsletter, The Opening Call. Very easy to get the opening call. Come over to our website at TFNN. You'll see the opening call. Go into newsletters. You'll see the opening call right in the top row. You can get the opening call for 1 month for $128. You can get it for 6 months for $595, which is a savings of $173. You can get it for a year for $995, which is a savings of $541. They all come with a 30-day money-back guarantee, folks. Get everything to win and nothing to lose. Happy New Year, Basil.
And a Happy New Year to you and to the entire TFNN team and to our listeners. Let's, as you like to say, let's make it a great one.
That's right. 2020, man. Can you believe that?
It's just hours and it's amazing, isn't
God,
it?
seriously, 2020. I love it. But it's like 2020, man. Holy cow.
The reason why I like 2020 and the decades after that is when you look back, it's so much easier to say, what do you say in the zeros? You say back in the zeros, it just doesn't make sense. Or even back in the teens. Once you say the 20s, it's a number you can latch onto. But
yeah, no doubt.
It has a ring.
And we'll see all those folks that are going to be 20 years old this year or 40 years old. That is going to be kind of cool. So
that's it. All right.
Okay, so let's do it, Basil. Last day of the decade. What are we going to do here?
We're wrapping up the year, and it's been a very strong year for all the indices. You know that in my work, I like to look at the fourth highest peak from the low bar, and I count the waves, and that fourth successive peak is called the peak D. You start peak A, then peak B. Peak C is the third, peak D is the fourth. It can go higher, but it's at D that other things can happen. And you can see here, we made in the Dow 28,701, we made a peak D. So that's a warning to me to say, hey, got to be a little careful here. So for subscribers to my opening call, we actually took a position yesterday on the short side, just a starter position in the Dow. But, you know, I keep talking about this, how important it is in my work on the technical side to look at the 9 and 14 period moving averages. And you can see there was a moment back early December where there was that sharp decline, and we went from this high bar right here on the 27th of November at 28,174, plunged and gapped down. Big red candle goes underneath the black line. That's the 14-period moving average. The green line turns down and it plunges down to the 27,325 area on the 3rd. And then it gaps up and it makes an island reversal and then gaps up again. And what's really important about this, you can see how close that green line came to crossing negative. And that for me would have been a tip off to say, yep, on the daily at least we've got a sell signal, probably going to a sell mode, and it deflected higher. And look, it stayed higher all the way through. Now what I'm looking at is it's flattening out, but it's still, to get this green line, this is the daily chart of the Dow. I could have anything up here, but I'm using the Dow for the moment. To get this green line to cut underneath the black line and change color to go pink, which means it's now in a declining mode, I would say you need, even from right here, where we're about unchanged at 28,450, I think you would have to drop at least 350 to 400 points to get that decisively under it. So to me, so that says at this particular moment, we've got some residual strength. That's all it's saying. And it says, if you want to be looking at the downside, you've got to be a little careful because there's, I'll call it selective technical support. There is still some residual strength. So what's fascinating about this is if I go through the S&P, and the S&P right at this moment, which was down sharply earlier on, now it's up 2. You can see it held the green line. For this green line, which is even stronger than the Dow green line, that 9-period moving average above the 14, it would have to go somewhere around here, 3190. So that's 30 points. So that's, that's like the Dow, as I said, over 300 points down. So far, that's residual strength. So I'm anticipating that we're in the process of making some kind of a top on the shorter term, but it's not going to be an easy thing because there are still a lot of people that are looking at the upside, and it needs to conclude. But at the same time, I'm thinking that January is going to be a really choppy month. I believe it has limited upside in all the indices. And for the downside, it's step by step. So if the Dow had to close at any point in the next 2 weeks underneath 28,200, 28,000, under that support level, start to get back into the 27,000s, then the daily chart is saying, okay, it's now in a sell mode. And the weekly chart, you can see how strong it is. It's only at a peak C. So that has a lot of support all the way down to the 27,800 area. So I think it's going to be a process that starts in January, that we got some kind of a topping action. It's not going to be easy for the bears, and I don't think it's going to be easy for the bulls. It's going to be sideways to very choppy. My thinking is it's going to be slightly lower highs after about early January, about the 1st or 2nd week of January, and then start to increase with slightly lower lows, and then the lows just start to expand. So that's my outlook. And what's very important to me is today's actually the anniversary. Exactly a year ago, on the 31st of December last year, we bought a Bank of America. We've had other positions in it, but we still have a core position from the 24s. It's trading right now in the 25 area. So that tells me that as long as the banks are holding well, I think that is very important because the banks were dismissed for a very long time. But I think bookkeeping-wise, they've done everything that the Fed has wanted them to do. And they will. Every major market top has had something desperately wrong in the banking area. And at this particular point, I think we're headed towards that way, but they are still strictly doing things by the book. So I think they're okay. And I think that you can see by Bank of America, a very strong leg C at all-time highs in the monthly. I think that's a good sign. I'm waiting for Goldman Sachs to sort of get going and become a leader, as it has in almost every big major bull market. This is the first time Goldman Sachs is just on the sidelines. You remember, there was a year, I think there was a year that they had like 3 losing days or something. You remember when they were big traders?
And what Baz was talking about, 3 losing days in the trading business, folks, and that's like sick. Yeah.
I mean, it's almost inconceivable. Mathematically, I don't even know what formula you'd use. But anyway, so they haven't been participating.
Just so that what happens there is that that's like you or I or the people listening trading. What happens is that they get the order flow coming in.
They have the inside story.
So they're making, they get the order flow on both ways. So they're making a spread. Right. So the banking system, folks, is a different type of trading. I mean, You know, they hoping that they already have it sold before they even buy it.
Correct.
Yeah,
So in other
right.
words, the position, they're kind of locked in the position immediately.
Right, right. But there's no doubt that they printed money beyond belief, man.
And that changed when there was a lot of legal action, but I suspect that they'll be back. And that, for me, would be a clue. Another big clue for this coming year is the IAI, and that's the iShares Broker Dealer Index. They haven't quite made an all-time high yet, 70.58 back in March of 2018, come really close. And I think that we've got to keep our eye on that, because if they start to break out, get to the 73s, I think a lot of the public will be coming back into the market. Right now, they're digesting big gains.
Folks, we're kicking into 2020. Basil, you have a great one, safe one. Let's see, I'm going to speak to you in the next decade. How's that?
Next decade, I'm looking forward to.
Okay,
have a great,
Basil.
happy,
Thank you so much, man. Have a great one.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has put together the best lineup of live content for traders by traders every market day, featuring some of the most knowledgeable and respected minds in the business. TFNN broadcasts 5 days a week live from 9 a.m. until 5 p.m. Eastern Time. We have live programming every market day during market hours. Every morning, Larry Pesavento kicks off the trading day live at 9 a.m. and breaks down the opening bell with Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the TFNN Bull Bear Trading Hour, followed at 11 a.m. by the team at TD Ameritrade and Thinkorswim with Fast Market. Basil Chapman hosts the Tiger Technicians Hour at noon, Steve Rhodes at 1 p.m. with the Trader's Edge, Dave White at 2 p.m. with the Power Trading Hour, and Tom O'Brien anchors the daily lineup from 3 till 5 as host of the Tom O'Brien Show. Tune in to TFNN's Tiger TV on your computer or mobile device, and you can always find us streaming on YouTube. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Market just went to Sherwin-Williams, folks. They got that green paint, baby. Dow up 11, Nasdaq up 16, S&P's up 1.5. Let's go over and take a look at it. We'll have a little fun here and just kick back in the last 10 years and take a look at where some of these equities were 10 years ago. This is pretty intense, man, when you're looking at it. So Amazon 10 years ago was $117, so you get $18.44. Microsoft, MSFT, let's see where some of these are. This is pretty wild, actually. So 10 years ago here on Microsoft, you took $22 to $157. And now watch this one. This is going to be just the opposite. Now this is where the type of energy that we have, folks, out here is just huge. ExxonMobil. I take ExxonMobil back 10 years. Look at this. This is sad. ExxonMobil, $55, you're at 69. Chevron, CVX. I'll do the same with Chevron. You'll see the same type of setup, actually. Chevron, no, better. Chevron's better. Well, Chevron's doubled. ExxonMobil's a dog. It's a dog that pays a good dividend, though. It's not a dog, but bottom line is that compared to Chevron, ExxonMobil was, Chevron was $66. Now you're running out at $120. We already done Netflix. Netflix, you talk about expansion topside, pretty amazing. Facebook, let me see if Facebook was, I think, yeah, Facebook was definitely public 10 years ago. So Facebook, this is, yeah, $18 to $204. Monster numbers there. There's no doubt about that. And Apple, we got to do Apple, you know. And this certainly is not the whole market, but we know that the tech players out here have been. There's been a huge transformation for a long period of time between tech in general. But what has happened is that you have a handful of tech players now that no doubt have been on a roll for a long period of time. So Facebook, $27 up to $292. Apple, rather. So Apple, $27 to $292. In fact, let me just take this back. I want to see this. Yeah, so Apple's consolidated a few times. Now, the thing that's amazing about Apple, of course, just this year, and Tommy has this on the front page of TFNN, the market morning market report. So Apple went from $142 to $293. And if we get over here, folks, if you haven't checked this out yet, this is a pretty cool report that he does every morning and every afternoon. What you're going to see is you're going to see the morning market report. This was today's morning market report. This is before the markets are open. And some of these numbers in here are pretty intense. So this is a great way to just to basically get your morning going, check out what's going on in the morning. And then in the afternoon, if the market's closed, you can jump over there on your phone, hit it, and see what happened in the marketplace. So check this out. This is a couple of these numbers are pretty intense. Apple and Microsoft led the way higher for stocks in 2019, rallying 84%, 84.4, and 55.2 respectively. Now check this out, though. This is the really intense part. They are the best performing Dow stocks of the year and accounted for about 15% of the whole S&P's overall gain in 2019. That's pretty intense. Chip makers were right behind them. You had Advanced Micro Devices, Lam Research, KLA Corp were the best performing S&P stocks in 2019. AMD, Lam Research both rose more than 100% for the year. KLA 99.3. Retailers, who would ever thought the retailers would come back? Retailers also, you had Target and Chipotle were up more than 90%. And for the decade, the S&P was up 188%. So there's no doubt that is also a large number. And that's where you can see the, you know, you're 20, 30 years old, folks. The bottom line, you know, when we talk about fee structures, what you want to wrap your head around is that the aspect of just buying the S&P and forgetting it, okay, on a long period when you're 20, 30 years old, guess what? That has changed things dramatically inside of the finance business, period. That's the real bottom line. ETFs, folks, when we go back, so picture this, let's see, the SPY I think was 1994 or 95. The Qs were 1996, because the day that the Qs debuted, I had the vice president of the American Stock Exchange on, because the amazing part is that the American Stock Exchange, folks, let me just see how this is, the ones that actually own the Qs. Oh, there it is there. Look at this. March 10th, 1999. So the Qs are only in existence since March 10th, 1999. So I had them on that day. That's what it was. It's my father's birthday, too. Interesting. Not 99, but March 10th. Anyway, you had the SPY, then you had the Qs, then you had the small caps. Then we had the slew of ETFs that come in. ETFs have changed the market dramatically, meaning that there is no doubt that, you basically are diversifying inside of a marketplace, and the real kicker, and this is the kicker, okay, is the amount of fees that are inside of these, meaning very minimal fees. Like the expense ratio for the SPY is 0.095 per year. The expense ratio inside the Qs is 0.200. So the bottom line is that, that's one of those deals that if you do turn around and just say, okay, yeah, I'm going to hold for 30 years, guess what? That's the way to do it, because the no-fee structure is a big deal. And we'll see how this shakes out in the next 10 years, because now, of course, what has happened, if we go back to the 90s, what you had is that's when you were trading in quarters, halves, okay? So if I quoted something, Newmont would be 43 1/4, 43 1/8, okay? So an eighth was $63.50, a quarter was $250. You're getting into a trade immediately. You're buying on the offer, you're selling on the bid, and you're losing money just on the spread. What happened, of course, in the 90s is that the day traders got in the middle of the market makers, and of course the biggest market maker out there, which was also the biggest crook, ended up being Madoff, okay, which is pretty amazing that he was actually in charge of the NASDAQ and was one of the biggest market makers out there. And when that business went kaput, which it started going kaput in 1993, it was basically changed dramatically by 1998. You had the spreads coming down. So then we went from an eighth, a quarter, a half, to fractional, meaning, 60 cents, 65 cents. And at the beginning, folks, it was by nickels. Might have been by dimes. No, it was by nickels, I believe. It went by nickels first. Then they brought it down to pennies. And as soon as they brought it down to pennies, folks, they went to fraction of pennies. So, I know that when you're looking at your broker-dealer platform, most of the times you're not going to see fraction of pennies, but you can trade in fractions of pennies, okay? That's the bottom line. So lots of changes in the last 20 years, and I expect you're going to see lots of changes now in the next 10 years, and it's going to have to do with the ETF structures. Dow up 20, NASDAQ up 16, S&P's up 2.5. We'll come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow up 28, Nasdaq up 18, S&P's up 3.5. Let's go take a look at Tesla. So Tesla's another one. Actually, let's bring Tesla back 10 years. Not sure. Yeah, I think it's been out there for 10 years. So Tesla, $19 to $418. And Tesla, by the way, folks, okay, this is a break topside with conviction. I get this on a monthly basis right now, and it's pretty intense because your top of this is 389. Your bottom is out here at 176, 276, 376. That's saying that Tesla can basically run up to like 590. 389, 189, yeah. You add a couple $100, you know, just ballparking that. But that's a monster number. But guess what? That's what it's saying. We blew away the top of the consolidation on a monthly basis. You had 111 million. The one prior to that was 185, and we've done 206 million. So on a monthly basis, this is it. Bottom line, you blew this away. You know, now it's a much longer time frame, but guess what? That's a monster number. And in Tesla's case, they are making hay over in the Netherlands right now, because what you do have is that in the Netherlands, you have a tax credit that is expiring. And they are pushing out some cars. You know, Netherlands only have 17 million people, but let's see what they have to say here. Surge in the Model 3 vehicles registered in the Netherlands this month could help Tesla make its vehicle delivery goal. As of this morning, they 11,563 Model 3 were registered in the country in December, which according to a subscription which publishes daily Dutch fleet data updates. Tesla needs to hand over roughly 105,000 vehicles worldwide this quarter to hit the low end of its guidance for 360,000 to 400,000 vehicles this year. Dutch car buyers have been rushing purchases of electric vehicles to take advantage of subsidies that expire at the end of 2019. Registering a Tesla Model 3 before year-end safeguards a 4% tax for the following 5 years on a portion of the list price below 50,000 euros, that's 56,000 US dollars. The tax rate doubles to 8%, and the price threshold dips to 45,000 euros starting January 1st. I'm not quite sure I understand that. The tax rate doubles to 8%. Okay. Tesla owners around the world typically pitch in at the company's delivery centers at the end of the quarter. Bringing donuts to employees and voluntary help to guide new owners through the various features of the cars. Elon Musk tweeted Monday that he would head to the company's factory in Fremont, California on the last day of the quarter to help with deliveries. Tesla handed over a record 97,000 vehicles in the third quarter and is expected to report later this week that it has set up a new high watermark in the fourth quarter. Bottom line is that they got action, man. You know, what you're also having with Tesla is that Shanghai factory, they just delivered the first 17 vehicles, which is nothing, of course. But guess what? You're talking about, you're in Shanghai. You're talking about they are buying electric vehicles hand over fist in China, folks. So Tesla is looking to do this year $24.3 billion, next year $29 billion. And here I'll show you the, this is one of the Chinese companies in China, folks, okay, NIO. NIO, they manufacture, sell electric vehicles, and the low for the year is $1.19. The high is $10.64, but check this out. They just come out with their numbers yesterday, and this stock went wild. The stock yesterday was trading at $2.41. By the end of the day, it went up to $4.87. And what that was about, I believe, the same thing, the delivery of cars. Okay, let's see. Okay, so they reported that beat the average analyst estimate. Okay, so the third quarter revenue was 1.84 billion yuan versus 1.7. They see fourth quarter revenue at 2.8 billion yuan. They had seen 2.35, big numbers. They see fourth quarter deliveries at 8,000. The third quarter delivery was 4,799. They're still losing money. Their gross, oh, look at this gross margin, man. Now, Tesla does not have a negative gross margin. That's the difference, too. This company has a negative 12.1% gross margin. So bottom line is that, you know, as to an electric car maker in China, they're moving product. That's the real bottom line. And when you're in China, folks, there's huge amounts of electric cars, and it's pretty cool because what ends up happening there is that, and there's a huge amount of gas, not gasoline cars, natural gas cars. They all have different license plates. So you can kind of, when you're looking around, you can kind of really see exactly how many electric vehicles that they do have out there. Let's say, well, hey, let's do this. Let me just see this. So this will be interesting because we did the, let's say gold. So gold's at 1520. We bring that back 10 years, and that's going to be, well, 1,045. So the highs in gold, folks, were generated in 2011. 2011, $1,920. We went, that was the high. We go down to 2015 to $1,046, and now you're basically up 50% from that. The cool thing about gold right now, we've been here for 5 months. This thing is building cars in order to bust topside, and the next bust topside would bring gold up to $1,795, and then that's the highs that are wide open. The thing that's intriguing inside that market in general is that it's because it's so many years later, you're kind of getting used to this price. If we take this, and now that's in US dollars, right? And the thing that's intriguing is that when I was doing this yesterday, if you put this in Canada, Monster, gold, venue, bottom line is that you're still over the highs of 2011. In Canada, and the Canadian dollar went up to 2,069, taking out the last high that was out there of 1902. Same with the Australian dollar. You can pull up quite a bit better than them, actually. The Australian dollar really took it out. The high in Australian dollar is 1827, and we got up to 2307. We go into, whoops, wrong one, that's the wrong one there. We go into even the euro. The euro actually took it out too. So check this out. It just barely took it out, but it took it out. And the euros, 2011 was 1388, and 4 months ago it was 1415. You know, so bottom line is that it's the strength in the dollar that basically kept the gold price in check, meaning at the you know, $1,200, $1,300, $1,400, $1,500 number as we come. That being said, guess what? You can pull up all those currencies right now against the U.S. dollar, and since the dollar has backed down, you're going to see some real strength inside of those currencies getting stronger versus the U.S. dollar. And it totally makes sense. You know, the dollar basically has been strong for 18 months, and bottom line, wants to back down. All you have to do is actually look at our deficit, and you can kind of wrap your head around the amount of bread that is owed out there. And the wild card still for next year is going to be that note and bond market. Note and bonds, bottom line, they still want higher price, lower yield. And guess what? For the amount of money that we owe, it better stay down at that level. Stay right there, folks. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome, folks. Dow up 41, Nasdaq up 15, S&P's up 3.5 as we kick off 2020, folks. Bottom line is that you're going to have markets finishing just about at highs out here. If we take a look at this cash S&P, the cash S&P right now, you're at 32.26, and the bottom line, your high is 32.47. Your closing high is 32.40. So bottom line is that all these markets are going to be closing at the highs. Now, there's no doubt that the differential, even when I was talking to Basil, the differential from this December 31st, from last December 31st, bottom line, you are starting off at lows coming into January. This December 31st, guess what? You are starting off at highs. So is there a differential? Yes, there's absolutely a different differential in the aspect of what kind of performance these equities would have to make in order to basically have the same type of setup that we did have last year. Markets themselves, folks, are going to be looking in January as to, listen, are they going to be able to accelerate this thing forward, and or is it going to get choppy? because what we do have, no doubt, you can see at the end of the year, there was no selling in the marketplace for tax planning. Bottom line, people wanted to go push this forward, and bottom line, we'll see as we kick into that 2020 where this is going to go. What we are going to see is that the dollar going lower would make it easier, bottom line, for equities to actually get higher. So there's going to be a lot of different movements inside the currency market, I should expect, for 2020. That's if I looked at something, the currency market inside the 2020, the metals market inside the 2020, commodities in general. We haven't talked about copper, but bottom line, copper had taken off, folks. And copper looks to me like, well, copper, lead, they start leading that commodity market higher. And I suspect it's going to be, bottom line, about the dollar. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you. We might as well have a blast with it, man. Yesterday's gone, tomorrow's not here. What are you doing right now? Let's party like it's 2020. Thanks for being here, folks. Thanks for growling and prowling with us. Let's look forward to a great 2020.